Hello friends, welcome to BISP Solutions. My name is Basant and in today's session we are going to see what is equity pickup and what is its working. So in Oracle FCCS, there is a concept like equity pickup, which is linked to the equity method, and it is basically used in the case of holding companies. So let's start and see what is the meaning and what all the things are. So first I will give you overview that what is equity pickup. So before that we have to see what are the legal entities. So legal entities can be association, corporation, partnership, proprietorship, trust, or individual that has legal standing in the eyes of law, and a legal entity has a legal capacity to enter into agreements or contracts. Assume obligations, incur and pay debts. Like a legal entity should be legal in any sense, and it have the it have the features as it can be take obligation and also sue and can be sued and own right and it can be held responsible for its actions. So it is same as the artificial person we see. So that is a legal company, legal entity, and further it is saying that what is a limited company. So a limited company is a form of incorporation that limits the amount of liability taken under by the company's shareholders. So all the all the people are which are the shareholders should be held liable for all the liabilities and the assets. Okay, they have the total ownership of that. And what is a public company? So a public company is whose securities are traded on a stock exchange. But yeah, we also have some public companies which are not listed in the exchange. And but yeah, their share can be bought by and sold by anyone. Okay, anyone which who want to buy and sell. Okay, and these are the entities basically we use in the hierarchy, like in the concept. Okay, so further it is explaining that what is a holding company and what is a company with the various tags, as what is subsidiary company, equity company, associate company, and all the things. So a company that owns shares of other company can be referred as a holding company. But yeah, for to being a holding company, um, we have to acquire more than 50% of the shares. And for the subsidiary, like there is one company that is A, and it have more than 50% shares in B company. So the A is called as holding company and B should be called as subsidiary company. Okay, so what in the case of when we have less than 50% but more than 20% stake? So in that case we have significant influence. Whenever a company holds more than 20% of the stake, um, it is called it have the significant influence, and it is called as the associate company. So this was the case for the associate company. But what is in the case of when we have less than 20% ownership? So it is called as equity. Like we take the equity, so we don't have any significant influence. But yeah, both under 50%, all the companies are equity companies basically. Okay. So now it is saying that what is the what are the investment methods we follow, and what are the investment methods and what method we follow. Okay. So a legal company generally records the investment in other legal companies using the cost method, except where required by the local regulation. But under the cost method of accounting, whenever we have a share purchase recorded by the holding company, we take all the investments are duly recorded at the cost. But whenever we sold or we dispose the investment, uh, we check at the time of disposal, we check either we have any losses or have we got any gains. So then only we will record that. But alternative investment accounting method is the equity method. Under the equity method, the initial cost recorded at the time of acquisition is adjusted periodically. Like the investment, when we use the equity method, we recognize the cost of the investment, but periodically we adjust the profit and losses which are beared by the company. Okay, and this accounting method, when applied to the reporting by a legal company, will be referred to as pickup. So that equity method is basically they are saying that it is when a legal company uses method, it is called as equity pickup in the FCC application. And to distinguish it from the equity consolidation method, equity pickup is only applied to the legal entity. Legal entity, they are addressing as the holding company. But yeah, we have further subsidiaries also, that is also called the legal entity, legal company. Okay. So, but yeah, equity pickup is basically used in the case of holding companies, that all the revenue equity like holding company gets from the equity and all subsidiaries are coming to the holding company. Okay. Further, we move on to that it is saying that the legal company results and the consolidated results should not be same. It will vary. Okay. And to record the results of equity pickup, the holding company shares of the change in owner's equity for the period, generally profit and loss of the owned company, less the holding company shares of any dividend declares. So it is basically saying that when we have a gain or loss, and when the dividends are declared, we have to adjust the investment, and we have to take into consideration all the revenues and all the things, and that is saying that we have to record in the investment. Okay. And okay. In complex multi-level ownership structure, a specific sequence of equity pickup calculation is required. So in the multi-level ownership, like in the chain holding, we have multiple subsidiaries, we have direct ownership, and we have indirect ownership also. So for example, we have a company A, it have a stake in B, and further B have a stake in C. So in that case, first we have to calculate the amount for the B, that is holding company, and further A is also holding company of B and indirectly C. Then we have to do the calculation for A. Okay. So this is how you can see we can legally make we can make hierarchy in our application, and this is how we can only manage to make hierarchy for the equity pickup case to get the correct results. So for in this example, as you can see, we have a legal entity 01 that owns 100% of stake in LE02. Okay, that is also a legal entity, and it have 75% of stake in legal entity 6. Likewise, legal entity 2 has 60% stake in legal entity 03, and so on, so on. All the ownership is there. But as you can see, we have 4 holding companies, that is 01, 02, 04, and 06. So these are the holding companies, and for all the holding companies, we have to make a separate C level, that is consolidated entity level, because we cannot put data just by the making it sea level, and further it have also have many subsidiaries. So that is why we have to make a step down subsidiary, which is similar to the name of it, and that is the same company. Okay. But to make that holding company, we have to make we have to make an imaginary parent, that is C01. This we have to make as an imaginary parent. Okay. So as you can see here, legal entity 2 was also a holding company. So for every holding company, we have to make an imaginary subsidiary, because LE1 also holds share in LE02. That is why we are making C02 as a subsidiary of LE01, and then further CE02 have a common have a same name child, that is LE02. That is, these both are the same entities. These both are the same entities. We are just dividing it with a layer. Okay. Further, same case with the C04, and with the same with the C06, because these are the holding companies. Okay. So this is the hierarchy. And further moving on, let me tell you what are the prerequisites. So the requisites to before we do the equity pickup case. So the first thing is that in the identity dimension, it accurately displays what are the direct entities, and what are the what are the EPO, what is the relation with the EPO equity pickup and all the things, and whatever entities are coming in the entity dimension is defined as the legal companies. We already discussed that. And one more thing, the holding company should have the same currency as the parent entity, otherwise it won't give us the results. And for the EPO, we have to follow this, that all legal companies in the entity dimension must be flagged as intercompany in the entity dimension. Like I will tell you. Like these all are the legal companies, and all other companies should be zero level descendant of the intercompany dimension. So we have to make all of the entities as intercompany entities. Otherwise, we won't give any correct results. Okay, so all this you can read here, and we also have document. This is the Oracle docs. All the things are here, and you can like read it from here also. Okay, and one more thing, equity pickup case is same as the chain holding case, and basically these cases are mainly used in the chain holding, but the chain holding is basically like important for the C level, and equity pickup is only for the holding company. So yeah, in equity company we are like restricted or only for working further, working currently for only legal entity 01, and for the chain holding we will like in the future session we will discuss the all the data which is coming into C01. Okay, so let's move on to our Excel, and I have made three cases. So I will tell you how is the hierarchy is made in the application and what is the what the case says. Okay, so in this first case we have a holding company that is A, and A holds 100% ownership in B, and further B have 70% ownership in C. Okay, but that is the indirect ownership A have in C, but A also have 30% stake directly with the C. That is 30%. Okay, so how the hierarchy has been made? So to make a hierarchy, we have to first define a C level, that is A. Further, we have to define a legal entity, that is AH, that's the holding company. And then because B also have a subsidiary, so that's why we have to make another C level, that is B. And further, B have a same name with the same name have a company, that is PH. And because we twice have the common entities, that is common subsidiaries. One is equity and one is subsidiary of B. So we have to make it as shared member. Either we can make this as a shared member, or we can make this as a shared member. Likewise, we can work. Okay, this can be also done. But yeah, I'm just taking I'm just taking this member as the main member, which is a sibling of these AH. And okay, so C is the sibling of B and AH. As you can see, this is the holding. It always have 100%, and it will also have 100% stake. But for these, we can change, like it can have 55% or it can have 90%. Likewise, we can choose our ownership percentage. Okay, and for other shared member and the main member, we can choose the percentage accordingly to our need. Okay, but one thing is important, that the percentage ownership of both the shared member should not exceed 100%, because it will give an error that you cannot do this. Okay, give an error of ownership percentage. So we have to make this to 100%. Both of the sum of this shared members should not increase by 100%. So both should be 100%. Okay, so let's move on further. Let me tell you how we can make a hierarchy, and how the hierarchy is made. And one more thing, only in the holding case the equity pickup is used. So that is why it is written that we can only use equity pickup in these entities. Okay, we get to see the data in these entities. Okay, so this is my FCC application, and in our FCC application, at the top left side you can see this is navigator, and we have to go to dimensions under create and manage. So let's open. So this is a dimension tab, and under this you can see various dimensions. So we have to go to an entity. So in entity, you can see we have a hierarchy of various, like we have total geography, total submissions, and legal entities, and so on. But we have all corporate company also. Under this, I have made one hierarchy, which is used in our first case. Okay. And one more thing, you can also import the metadata of the entities or any dimension with a CSV file. I will show you the CSV file. So with this format of CSV file, you can add any entities with any parent or any, like we can also make shared, like we have to give the data storage properties also. Then we can make a shared entity also. Okay. So as you can see, this is the same type of hierarchy which is present in our application. We have made CS shared. As you can see, we have made CS shared. And one more thing I have to mention is that whenever we have to make the hierarchy, we have to give them the attribute as intercompany entity to make them all as legal base level intercompany members. Okay, and to see that, you can just go in the intercompany dimension and see all the entities will be present here. Here you can see we have all the entities present here. So let's go and define our ownership structure. So go to consolidation in the navigator. And one more thing before we define our the ownership, we may have to make sure that in this tab, the process tab, we have to go to local currency, and in local currency you can see um, we have to take yes in the equity pickup. Okay. Okay, so we have just added the entities. That is why it is saying that metadata has been changed. So let me choose my entity. That is A. This is this entity, and scenario is actual. Period is January, and yeah, year is FY 18 in my case, financial year 18. I will select that. Click on the go arrow. Okay, and we have to copy the ownership list data and all the things. For the time being, I'm just want to tell you that how we can define the ownership structure. Okay, so as you can see, we have 100% A and 100 B. A has 100% ownership in B. So in B, we have to make this first holding, and control is 100%. Ownership on and consolidation percentage is 100%. Okay, so B is a wholly owned subsidiary, and I have made this holding. But as you can see, at the top level, B is still the subsidiary of A. Okay, and yes, C. To C, we have to make B have 70% stake, so we have to make this 70% and make this as subsidiary. Okay, it is automatically taking it, and this we have to make a equity company. Okay, all is done. Save changes. So this is the tree hierarchy, and we also have the legal entity hierarchy, which I will show you. Okay, data ownership data for the certain parent entity combination invalid. Okay, we have to check what we have done wrong or right. I guess all is correct. Let's try to save it and recompute. Okay, recomputation is successful. It is just that we have to copy all the data from the previous year. Okay, no need to worry on that. If it give error, then we will correct this error also. Okay, so let's move on further. But before, I want to show you the legal entity hierarchy. And under this, you can see A is now having like I told you, A have three childs, so it is now having AH, BH, and C, and further B have like two childs, that is BH and C. So it is automatically taking that and making the AH as holding. And as you know that B was holding previously, but in the A's hierarchy at the C level, you can see the child that is BH is now subsidiary. Okay, and here you can see B is the holding, but that's the beauty that it automatically become make it hold subsidiary of the A. Because one thing is very much like the document says that in a particular parent in a hierarchy, when a parent is there, only one child can be the holding in that particular hierarchy. That is why we cannot make two holding in this in three of the entities. We only can make one holding as an entity. Okay, so I made one input sheet, but before we move on to the input sheet, I have to show you one. I want you to show you some calculation that how the equity pickup case will be running and what are the general entries will be done by us. Okay, what the application done by itself automatically. Okay, so as you know, we have a C level, that is A, and at the consolidated entity level we have two companies that is holding, and it either can be holding subsidiary or equity, and we have one holding company. Okay, for subsidiary we have to make it for more than 55%, and for equity we have to make it less than 50%. Okay, so our case is that suppose we have a subsidiary, and subsidiaries have cash, and how it can having a cash might be have some investment by the holding company, so that's why they are having some cash figures, and by the time they have some retain earning as well, and whatever retain earning they have made, okay, the retained earnings should be come to the holding company. Okay, so what will equity pickup will then do in that case? So at holding company, like at this company at this level, all the retained earning portion of subsidiary equity will come to the investment in equity pickup. That is a particular account in our account hierarchy with the ownership wise, and it is only the at the holding level it is only relevant for the equity pickup and not for the C level. Okay, and after the retained earnings are coming and equity investment are coming, and with the same amount equity pickup, equity company income will be credited. Like retained earning is the parent of this account, equity pickup, equity income account, company income account. So what will the general entry? General entry will be investment in equity pickup debit to equity income, company income credit. So in this case, this is increase and this is also increase. As you all know, assets, whenever assets are debited, they will increase the assets, and whenever liabilities are credited, they will increase the liabilities. Okay. Okay, so let's move on further. And what will happen at the consolidated entity level? So at the C level, that is the when we see all the data of all the subsidiaries and the hierarchy in the hierarchy. So all the portion of investment in equity pickle will be credited. That whatever coming in this will get credited, and all the data will come to the amount will come to investment income account. I will tell you, and this will only happen in the case of equity company, not in the subsidiary, because in subsidiary we calculate the goodwill. Okay, that is why we don't consider this thing in the at the C level. Okay, and at the C level, subsidiaries retain earning will come in retain earning, and the rest will come at non-controlling portion. As you all know, we have subsidiary. When we have subsidiary, we have minority and controlling people also. That is controlling part and the non-controlling part. Okay, so what will the general entry? General entry will be done as we take all the assets, and all the retained earning and all the equity will get credited, and yeah, minority interest will also be there, and yeah, we take all the assets and we take all the liabilities. So that is why. Okay, so with that particular hierarchy we have made, I have just prepared one case Okay, we have one input sheet, and as I told you, we will put figures in some in this that C level. We will put some figure in this C entity. Okay, and after putting the figures, we will see what figures are coming to the what figures are coming at the holding companies. What are the holding companies in this case? In these cases are, this is the holding company. This is also the holding company. Please ignore the name. These are all, the hierarchy is same. This just the alias is different. Okay, and yeah, we have put it cash figures, and we also have 5,000 as the retained earning. And further, it is rolling up to the net income, and after net income, it have retained earning. And the total of the total liabilities and equity is 5,000, and same with the total assets. Okay, so at the input sheet you have seen that this is the input we have given. So whatever in the FCCS, if there is a shared member, if we put in the any of the shared member or any of the company, it will automatically roll up all the numbers to the other member also, that is the shared member. Okay, so this is my output sheet, and you can see at the POVs. So in that input sheet, we have this A column as the movements. These are the accounts. Okay, and this is the data source dimension. This is the intercompany dimension, and this is the consolidation dimension. This is the entity dimension. This is year dimension. This is period dimension. Okay, and in the output sheet, you can see that. Okay, we also have the local gap and no product. No product is just the custom dimension we have in our application. The parent is product. The dimension is product, and the member is no product. We are not taking any product in for the time being. Okay, so what should come at the that the LEC, that is the C company, what figure should come? So we have cash at the output, and we have revenue, that is retained earning. It is coming as the same, and at the B, that is holding company, we have two holding companies in this case. So because B have 75% stake of C, that is why it is giving us 3,500. So so 5,000 into 75% comes to, okay, we have 70%, my mistake. We have 70%, so it comes to 3,500. Okay, so as you can see here, let me just expand it at the full view. Okay, so as you can see here, what is happening in this case is that whatever figures are coming with the C company, it is now coming under equity pickup. That is what I said to you with the general entry, debiting the equity pickup account and crediting the ECI. ECI is that equity company income. So as you can see, we have 3,500 as ECI, and we also have equity pickup. But at the C level, because it is subsidiary, so at the C level, it won't take any investment. It will just like for the, it is done for the calculation goodwill, and that is why we are getting some figures in the goodwill account at the C level also. Okay, so we are getting equity investment in equity pickup, and it is rolling up to this investment in equity companies. So this amount is rolling up to this, and this equity company income amount is rolling up to net income, and further it is rolling up to retained earning. And finally, the balance sheet is balanced. Okay, because in holding we don't have to take any assets or liabilities. At the only at the C level we want all the asset and liability should come. So that is why I didn't took the figures in this simple case to make you understand what is happening in the equity pickup. Okay, so as you know that in the hierarchy it has 70% stake, and A also has the direct 70% in C also. So what you can see at the A level, like the holding level of A. Okay, so because A have a 100% stake, I will show you at the legal entity level also. A will take 100% of C, because why it is happening? Because A already have 30% stake. A already had 30% stake, and it totals to 30 plus 70, it comes to 100%. So that is why A is taking all the revenue, all the figures in its balance sheet at the holding level, and all the figures are coming at the equity pickup, and at the ECI, that is equity company income, it is coming as 5,000 also. Okay, so this is the holding company at which you can see the figures. Okay, the LEB also done. Okay, so let's move on to our next case. That is another a very interesting case we have, because in this first case we have the step down like layers of entities, but in this case we have two parallel entities which have same common child, that there is one entity that is Y, that is the parent company, and it have two childs, that is two subsidiary, one is X and second one is equity company, that is uh, okay, both are subsidiaries, one is X and one is Z, but yeah, Z have 40% stake in A, that is the equity company of Z, and X have 60% stake in A, that is 60%. Okay, so yeah, so this is the case, and how the hierarchy has been made. As you can see, that is a C level, and this is the holding, and it have two siblings, because this is a C level. We again have to make one holding company with the same name, and it have two childs, two more childs, that is X and Z, and further X have two more childs with the same name of XH, that is the holding company, and one is A, that is the common child in both Z and X. So we can make one as the main member and one as the shared member. Okay, so for this also I have made one input sheet, but yeah, before this I will show you the hierarchy. So let's quickly change the entity. Here is the Y. Let's find Y. And I will also show you the consolidation rules which are inherent in the application. We either can make the rules, or it is the demo instance, so we have already have some rules in the pre-built rules in the application. Okay, so as you can say, see, this is the hierarchy which we have in the first, in the second case. As you can see, 100% in X and in X and Z, and X have 60% and Z have 40%. Okay, let me change this to the tree hierarchy first. Okay, so as you can see, we have 100% as YH, and further it have sibling, that is X. Again, it is subsidiary, so it is subsidiary, and further X have child, that is double A, that is it have 60% stake, and further Z have again 40% stake in double A. So this is how the hierarchy has been made. Okay, this is holding company, this is again holding company, and this is again a holding company. Because we cannot put figures in this at the C level, that is why we are creating a holding company, holding level for all of the entities. In short, we cannot put data in the parent. That is why we have made the child of it. Okay, so let's move on further. This is the input sheet which I have prepared for the case. Okay, so what figures we have? POVs are just similar to the previous one, just we have the difference in the entities hierarchy. Oh, wait a second. Okay, so we have like the previous case, we have cash as we have cash figures and revenue figures to make it simple. So what you can see here is that 50,000 cash is coming. Okay, and revenue is coming, and we don't have any figures for the ZH, that is the holding company, and at the C level of Z, it is blank because we cannot put data in this, and whatever comes in this automatically, like both entities are same, just the hierarchy is made in that manner. And yeah, at the XH, we have its own cash figures that we have to look on especially, and we have revenue specifically for the XH. We also have the revenue figures also. Okay, so in total we have X have 5,000 revenue, and some revenue will come from the A company, double A company. Okay, and YH also have cash. Okay, and it have common stock, but we don't have common stock in XH because somehow the rules are been set that in the equity pickup that it won't give us the correct result. I will show you why it is doing so. Okay, so this is the input sheet. Please keep in mind that what figures are here, and we will also cross check with the figures. Okay, so in the first case, in this in the first case of this hierarchy specifically, like in this hierarchy, in the first case, we have let me tell you, we have the cash figures. So for ZH, yeah, for ZH, it have 40% ownership. So 50,000 into 40% comes to 20,000. 20,000. So at the pickup, equity pickup, that is the investment account, it is coming at as 20,000 at the holding level. This is most important thing to remember, that what is holding and what is C level legal entity and what is C level. So yeah, at ZH we have 20% in the equity pickup, and it is rolling up to investment. Okay, and again with the revenue, we have equity pickup income, and it is finally rolling up to retain earning, and after retain earning, it is finally rolling up to the equities and liabilities, and our balance sheet is balanced. And we don't have any of the figures with the ZH, so all the figures are only coming for the only for this. Okay, and one more thing, whenever we want to see the output, we have to run the rule of consolidation. I will tell you with that also. Okay, so further moving on, as you can see, in the equity case, which I wanted to tell you especially, uh, only the equity amount will come. Yeah, the portion of equity amount will be credited into and credited, and the investment income will be debited. So this is what written in this sheet, and this is what happening practically, that whatever was coming in the equity pickup, it is now coming in the income side, and it is rolling to the investment in equities. Okay, and the revenue is same. Okay, and XH have 60% in the in double A. As you can see, X has 60% stake in double A, so it will take 60% of whatever comes in the double A. So 50% into 60% comes to 30,000. So in the equity pickup, you can see we have 30,000 is coming, and it is rolling up to this. But the thing is important here is that when the in the equity case, all the 20,000 amount is coming to the income side, but it is not coming as the same in the X company, because it is subsidiary for the X, and in the previous that it was the equity company. So in the subsidiary we have to calculate the goodwill. That is why it is not taking into consideration any of the investment amount. Okay, and we have not put it in any common stock. That is why goodwill figures are not coming correct, like it is missing, coming as missing. Okay, so what you can see here is that at the holding level, at the equity pickup, is that 30,000 is coming, and yeah, revenue itself, the revenue of itself, the XH company is coming as 5,000, and rolling up to net income. And how the 30,000 is coming? It is coming as because at the equity company income, it is the child of retained earning. So at total, it is coming as 35,000, and same figure is coming as 35 in the total assets. Okay, here you can see in the total assets. because 5,000 was only in the input sheet. We put it this 5,000 plus 30,000, the income which is coming. Okay, so yeah, it is totally balanced in the at the top level of the balance sheet hierarchy. Okay, so what figures are coming at the C level? So at C level, as you know, whatever it is a subsidiary, A is a subsidiary of X. Okay, and as we all know, whatever the in the subsidiary case, whatever figures are coming in the assets and liability, the holding company will take all the cash, all the assets and liabilities. So that is why the cash, 100% cash is coming in the at the C level. This is the C level coming for the X. So 5,000 cash was with the itself with the X, and 50,000 cash is with the double A. So in total we are getting 55,000. And yeah, similarly, because we have minority part also, that is this 20,000, it is coming at the mm, coming in the minority interest, and the total of the assets is coming as I will tell you, because we have 50,000 and Axe owns 60%, so it is coming as 30,000. But because 50,000 and the 40% is with Z, so 40% amount is coming as the minority interest. The minority interest income is different, and minority interest is different. It acquires all the common stock of the minority people, and it have the retained earning. Okay, so this is how, but it is zero because we don't have any stock in the A company. That is why it is coming as zero. But at the minority interest income, as you can see, this is zero. This is coming as missing. And at the minority interest income, where it is, yeah, it is here. Uh, Actually, one more thing is that the hierarchy is made like in that way. The hierarchy is made in that way. Whatever comes in the interest part will get roll up to the minority interest. But yeah, because we don't have any common stock, that is why it is taking it as zero. But yeah, because this figure, minority interest income a figure, that is why it is rolling up to minority interest, because the topmost parent. I will confirm you with the hierarchy also. Here you can see the minority interest income is the zero level member, and wait a minute. Okay, so it is the topmost parent. So that is why whatever comes in the minority interest income is now it is rolling up to minority interest. Okay, so let's go. So as you know that we have minority people also there. That is the non-controlling people, non-controlling part we have in a balance sheet. So 20,000 plus 35,000 comes to 55,000. So that is why we are getting this amount. And the liabilities and equity is coming as 55,000. And the total cash figure we have, as you know, 5,000 plus 50,000 is coming as 55,000. Okay, now let's move on for the Y edge. So YH also the holding company we have in our hierarchy. This is the topmost parent, and the super parent is Y, that is the C level. Okay, so this is a holding company, and as you know, holding company takes all the assets and all the things, but we will see at the C level, but at the holding company, it will only have its figures for the assets and liabilities. Let me tell you with the input sheet. So at input sheet, you can see we have cash figures in the YH and we have common stock for the YH also. Okay, and okay, what figures we are getting here? And in the equity pickup, you can see we are getting 55,000, and how it is coming, I will tell you. 1 second. So how it is coming? Let me go to the hierarchy first. Yeah, this is the hierarchy, and let's select the legal entity hierarchy. So in the legal entity hierarchy, you can see we have Y as a C level and YH is the holding, and you can see it will take all of the like figures at the holding, that all the revenue it will take 100%, and for the double A it will also take 100%, and for ZH it will also take 100% of the revenue. Okay, so is it taking or not? Let's see. So we have 100%. For A, we have 50% revenue. So it is taking 50%, like we have 50,000 revenue. So it is taking 100%, that is 50,000. And for XH, if it have 5%, 5,000 revenue. As I told you in the input sheet, at XH have individually 5,000 revenue. So that is why it is taking 100% of it. And in total, it is coming to 55,000. So at the total of net income, or you can see the retained earning, it is coming as 55,000 plus the common stock it have in the balance sheet, and total is 65,000. And yeah, one more thing is that 55,000 is coming in the equity pickup, and totally rolling up to the investment in equity companies. Okay, so yeah, in total we are getting 65,000 because we have cash figures also, and investment is 55,000. So it is done. And let's see at the C level what figures we are getting, because we take all the assets of the of the subsidiaries. So we are taking 55,000 plus 10,000. So it roll ups to 65,000. Okay, and we have revenue, and all the things are coming as the same. Okay, so this was the case of when we have a hierarchy like this, when we have one subsidiary and we have when we have holding subsidiaries and it have 60% stake in one another child of it. Okay, and one have equity company. But in the third case, that is similar to the first, but we have a change. We have one changes in that Y is now having 55%, not the 100% stake in the X company. Okay, so what figures will come? So previously, what double A was coming as Y was taking double A as 100% because this is multiplying with A's stake, that is 60%, and with the Y's stake it is coming as 40%. Okay, so in total, the total of these both of these is coming as 100%. Okay, so that is why Y was taking 100% of it. Again, I will tell you, Y was taking 100% of A, Okay, but in the next case, Y is taking 70% of the A, and how it is coming? Because Y have 55% in the X and X have 60%, so it is aggregated to 33%. So into this to this, it is coming as 33%, and same with the first case we have in 40% is coming. Okay, and the total is coming as 73%. So YH will take now 73% of double A. Okay, let's move on. And we have to first make some changes to the to this ownership structure. So we go to the tree view and I will make this as 55%. Let's see what changes we will get in this. Save changes, recompute the ownership. Click OK. So recomputation has been done. And okay, let's see the third case. So I have one case, and before we move on to, let's now finally run the rule of consolidation. So we go to navigator and go to rules, go to consolidate, and you can also run the rule with the data menu also. So my entities will be ZH first. I will console ZH. Okay, and let's launch. Okay, so the rule has been executed. Whenever it takes much more time than the usual one, it throws this dialog box and we have to refresh it. In the jobs, we can see the process has been done or not. So yeah, it is done. And let's refresh our sheet. Okay, so it is done. And let's run another rule for. Now we are running the rule for XH. Okay, one thing we have mistakenly done is that we didn't change the financial year. We have to make it as financial year 18. That is a mistake you can also do. We have to always check the scenario, all the POVs here. Okay, let's refresh and go to jobs. Okay, what error is coming? Okay, we have ownership. We have to copy the ownership. Okay, no problem. We will copy all the. It will just take some time. Let's go to financial year 15 and you have to select December. And here you have to copy the ownership. With this function, we can copy all the ownership of the previous year to the next year. Okay, it is done. And now we will do the same for the 16 financial year 15, 16, sorry. 15 is done. Now we would do the same in the 16 year. and we are as we are recomputing the ownership and copying the ownership structure, might be we have to give again the ownership structure to our entities, but okay, no problem. Nevertheless, we can change that with a quick very quickly. Okay, now we are sending the data to the financial area team. Okay, let's open 18 and select January. Okay, let's select our hierarchy. That is Y. Okay, it is not changed. Okay, very nice. We again recomputed it. Okay, it is done. Recomputation is done. And let's go and run the rule of consolidation. This time I will run the rule from here within the smart view. You can also do the same. Go to panel, smart view and panel, and make sure the entities is present here. The connection is present here. Go to business rules and go to consolidate, and here you can select the entities. So let me just go with the XH. All is correct. Okay, and from here you can also check the jobs. Go to more and check the job console. So it is processing now. Okay, it is completed, and let's refresh. Okay, it is refreshed because previously I was checking and it have data, but no problem. We will just verify the figures. If any changes are there, that then definitely it will change, but it is not changing. So yeah, our figures are correct, and also run it for the YH also. Okay, it ran successfully this time. And let's refresh. And one more thing I will do. I will run it for the Y also. Okay, I think we don't need to run at the Y. Some figures are changed in the YH when we have done the, because we have changed the ownership in the backend. That is why some figures are changed. Okay, so let's see what figures should come in the YH and what figures should come in the XH and what figures should come to the ZH. So these are the holding companies for the equity pickup. So the input sheet is same for the second and third case. We have cash figure in the AA and we have revenue figures. So let's see it is coming or not. Yeah, it is coming. And yeah, when we are seeing investment and all the things with the ZH, because we have 40% stake and we have done 40% investment in that in the Z in this AA by the ZH. So we have to take 40% of this. So it is coming as 20,000 in the equity pickup. Let me just shift this POV box. So yeah, it is coming in the equity pickup account and rolling up to the investment in equity. Okay, and one more thing. Let me just close it. One more thing. At the C level, whatever amount is coming, as I already told you, whatever amount is coming at the income side, equity pickup side, going to income. It is again the hierarchy. These both two are the descendants of the equity companies, investment in equity companies. So that is why these two amounts are same, But yeah, this is now coming to this side. And the entry, income account debit to equity pickup. Okay. So let's move on for the XH. So X have what percentage of ownership it have? It has 60% ownership in double A. Okay. So what is the 60% of 50,000? That is 30,000. So is it coming? Yeah, it is coming as 30,000 in the equity pickup. But one thing we have to again see that at the C level, because it's the subsidiary of XH. A is a subsidiary of XH. That is why it is not taking of the investment. It will use like the figure will be used for the calculation of goodwill for the super parent, that is the Y, and the holding company. Okay. So yeah, it is rolling up 30,000 to this investment, and further it is again, as you know, we have inputted 5,000 revenue and cash for the XH. So that is why it is taking 5,000 as cash. Okay. And 30,000 is coming, is rolling up from this. So total assets is 35, and revenue we have, income we have, equity company income we have 30,000, and revenue itself of XH is 5,000, and total is coming as 35,000. Okay. So this was the case for the XH, and let's see the C level of X. So we have cash figures, and how it is coming again, the 50,000 plus 5,000 is coming as 55,000. And yeah, in this time we don't get any income because it will use for the goodwill. And yeah, we have minority people, likewise in the we had in the previous case. So all figures are same, but one thing is going to change is that in the YH, that we have to see. In the previous case, we are getting all the 100% retained earning, that is 55,000. Okay. At the YH, equity pickup is also 55,000. But in this case, when we have changed the ownership, let me show you, we have changed the ownership of X as 55%. So what figures we are getting? So revenue should come. What revenue should come? Revenue should come. Let me show you the legal hierarchy also. So in legal hierarchy, as you can see, the Y only takes 73% of the double A. So that is why it is taking 73%, that we have calculated also. It will only take 73%. So what is the figure of A? The revenue of A was 50,000. So 50,000 into 73% will come to 36,500. And yeah, what was the revenue of XH? It was 5,000 only, as you can see. So 5,000 into 55% will come to 2,750, because it will take only 55%. Okay, and for Z, because we don't have any revenue or anything in ZH, so it will be zero. But yeah, if it has figures, and like if we have inputted the figures in ZH, then it will take 100% of it. But yeah, we don't have figures for now in ZH to explain you that. So that's it. That's why I taken zero figures, and 0 into 100. Okay, or 1. So that will comes to 0, and the total will come to, the sum will be 39250. So let's see we are getting the right figures or not. So yeah, at the equity company income we are getting the right figures, and it is rolling up to the net income. And finally we have common stock for the YH, that is why it is coming as 10,000. And yeah, equity pickup is coming as the same, and we have cash figures also. So yeah, the balance sheet is totally balanced, and we have zero balance in it. And let's see at the C level, because we have like 50,000 in A and 5,000 in this and 10,000 in this. So total is rolling up to 65,000. Six, uh, okay, this is repeating. So total is 65,000. So that is why we're getting cash as 65,000 because this is subsidiaries. So we are taking cash and assets and liabilities. And please ignore this minus 20,000 because the rules are now set, currently set as we are getting this negative figure. Okay, and we are getting the same figures. And one more thing, we don't have any minority at the C level. Okay, but yeah, interest we have 20,000. And as you can see here, which I was talking about minority interest, it is coming only for the X, not for the Y. Okay, might be we have to run the rule again and it will come. Okay, so basically what is coming is that we have actually with the rules are set, that is why the figures on this we cannot see correctly, and I will show you the rules also, what rules are there in the FCCS application, what are the configurable rules. So when we go to this process tab, we have consolidated, and under this we have various configurable rules, and automatically it says that whatever the difference arise in the with this rules, go to the elimination. Okay, elimination is just a member. Okay, so these are the various rules which are deployed. Green ones are the deployed ones and blue are the undeployed ones. So for equity pickup we have three rules, okay, which we will discuss like brief very shortly. So this was the case. I hope you got all the details from here, how the figures are getting roll up to the for the equity. And one more thing, uh, I will tell you, when we open the rules, this is the rule set, and under this we have various rule. So in the rule set we provide the source. So in the source we have provided, we have to provide the factor as it at what percentage the amount will be get calculated. So this is factor, and we are choosing as entity ownership. Okay, so we have source here at the left side. We have source and entity is legal company. Legal company, I already told you that any company in the that is the zero level member, it is the legal company, especially for the equity pickup case. And yeah, accounts we have chosen as company income. That is why we are getting all the data in the amount in the equity company income. Here we have excluded, but I will tell you how it is coming. Okay, this is the first rule. So it is excluding. So whatever comes in this, I will tell you the target sheet also, the target rule also. So yeah, here you can see the legal company is entity, and we'll go to the legal company itself, and account is the same. We just exclude, but yeah, at the target, this is the right side. You can see the target. The amount will go to equity pickup source. So that is why we are getting some random figures, and the figures with the ownership percentage are coming in this source also. Okay, and intercompany top, and moment is no moment. Okay, data source is EPU. So in the third rule, in the second rule set, we have two rules. So first is for the reverse proposalization for the consolidation percentage, and we have account equity pickup source. So whatever is coming in this is throwing back. Okay, it is subtracting, and moment you can see no moment, and in second it will add. So actually, both the rules are running simultaneously in this rule set. Okay, it is now adding it, and we have the third rule, that is reverse company data, holding company data. So yeah, this is how whatever is coming in the equity pickup source, it is redirect to this account. At the C level, you can see we have the equity pickup amount, and it is reversing with the at the C level. So with this rule, it is being done. Okay. And we have many other videos on the configurable consolidation rule. You can refer that on YouTube at the bspsolutions.com, that our YouTube channel. I will also mention you that in the end of the session. So you can find a rules video for this also. Like we have made various rules on the configurable rules. Okay, so this is the rule on by which whatever come in this equity pickup and equity in company income is now coming as the as the same as the source. So target is same. So that is why we're getting some numbers here in these accounts, both accounts. Okay, this is the rule part. And one more thing, important thing is that this is the fourth rule which is not deployed currently, because in Oracle Docs it is saying that either we can use a 1, 2, 3 rule. This first rule said second and third at the same time, or either we will use that one, third, and fourth rule. So this is what docs recommend, and to get the correct results. And I will show you the YouTube page also. So this is the YouTube page of BSP Solutions. You can refer this channel, and you can get to know many more uh, many important learning content you can have in here. So okay, let's move on. And these were all the three cases of the equity pickup. I hope you get all the required knowledge with these cases, and the proper working of it. So yeah, thank you for watching this, attending this session and watching this video. And if you have any doubt, you can, yeah, visit our website, that is bspsolution.com. And thank you for watching.